Hi, thanks for joining me on the Discover Your Life Today YouTube channel. My name is Maveen Kaura. I am from discoveryourlifetoday.com. Today I'm going to be talking to you about what you need to consider before financing your new car. You can actually go over to discoveryourlifetoday.com / before financing your new car and kind of read the article that I also wrote about this topic as well. So before you're financing your car, you probably want to know why you want to go out and finance a car. You may want to consider how old your current vehicle is. Maybe it's been a few years since you made your last purchase, and maybe you're still debating between financing, leasing, or just buying your vehicle outright. Now, what I really want you to consider is before you finance your new car, you may want to consider why you want to do it. And these are some reasons I want to give you. I want to give you 5 reasons to consider before you do so. Maybe you've got a raise at work. Perhaps your car is just old and it's not working the same as it used to. Maybe you're just putting so much money into that vehicle now that it's just costing you more money to keep putting into the vehicle versus running the vehicle. Maybe your car was in an accident and maybe insurance paid you out and now you just need another form of transportation. You know, I believe in North America, a car is super important. It does get people from place A to place B and any other point in between. You know, public transportation could also be used, but for most people, it just takes a lot of time to get from point A to point B. So even if you have a car, it's definitely important because you probably need it for work, family outings, maybe just to travel. You don't want to put yourself in a financial bind though just to get around. So the whole idea of this video is to really help you understand why you want to finance your car or maybe why you may not want to finance your next vehicle. So these are just thoughts for you to consider before you go ahead and do so. So the first thought here is looking at the cost to borrow. When you finance a car, it can typically cost you for a brand new one off the lot anywhere between 0 and 8% and sometimes even more. Just to borrow the money to make that purchase. Now, the way you borrow that money is because you don't have the money to put down all of it, or you don't want to put down all the money right away. So you say, you know what, I'll finance it over X amount of time. So maybe that's 24 months, that's up to 60 months, or even up to 96 months. Some people will allow you to do that. So let's look at some scenarios. Let's say you're looking at a $30,000 vehicle and you're financing that over 60 months. Now, let's say the interest rate was 0.99%, which is pretty low. So this means that you would pay an additional $760 on the full price of the vehicle, which is not a lot. But let's consider if you were looking at a $60,000 vehicle. In the $60,000 vehicle, you'd actually end up paying $1,522 more over that 5-year or 60-month period. So you just have to consider, do you really want to pay the extra $700, $800 or $1,000 or $1,500 to borrow that vehicle, again, depending on the price of that vehicle? Now let's consider the fact, let's say you have not so great credit and you can't get a 0.99% approval. Let's say you get approved at 8%, something a little bit higher. So that same $30,000 vehicle at 8% over 5 years now costs you an additional $6,498 more. Now let's consider the fact, let's say you bought a $60,000 vehicle instead of a $30,000 vehicle, and at the exact same 8% over 5 years, that would actually end up costing you over $12,000 additional on top of that vehicle. So that means you're paying $72,000 or more for a value of a vehicle at $60,000 or less. So you really just need to have an understanding of what that's going to cost you and what it may cost you in the long run. Now, a lot of times dealerships will charge 6% or higher, or even more if you don't have good credit. So maybe consider using your line of credit through your bank if that's an availability to you, and if it's less than what they are charging you at the dealership itself. Sometimes you may want to be able to use that interest rate instead. Second thing to think about or consider when you are looking to finance a vehicle is that you're committing to monthly payments. Now, when you're buying the vehicle, the terms and the conditions can be somewhere between 12 and 96 months. Could be a shorter term depending on if you're able to pay off that vehicle a lot quicker as well. The quicker you're able to pay off that vehicle, the less interest payments you'll have to make. So the cost to borrow that money obviously goes down as well. Now, if it's possible, you can look at making those month-to-month payments, and that's something that you're committing to. You're committing to what you could do today, well into the future, something that you cannot see. So you're saying, yeah, you know what, I'll be able to make these payments even if I potentially lose my job, or if I have something else come up, I'll continue to make these payments. What happens if you don't make those payments? Typically, the banks will, say, we want our money, and your vehicle still can be repossessed. So consider the possibilities that you may lose your job, or you may want to do something else. Maybe you want a different car. So just keep those kind of things in mind. Now, worst case scenario, you sell your car because you lose the job. That's probably what some people are thinking. Well, I can just sell the vehicle, I'll pay off the vehicle that way. Absolutely true, but keep in mind, anytime you sell a vehicle that you have and you own, you're typically going to sell it for a lot less than what it's actually valued at. So even if you were to get some of that money back, typically you're still left with money that you still have to pay back in the loan once you sell that vehicle. And in the end, you still have less money available to you, and you don't even have a car. So the third thing I want you to consider is the automobile loss value, or the depreciation of the vehicle. I believe most people know and have heard of that once you drive the vehicle off the lot, it loses about 20% of its value right away. Now, this doesn't actually happen when you drive the vehicle off the lot. It actually happens a long time before that. It happens when the dealership actually registers your vehicle and you become the first owner. So you don't even actually have to drive this vehicle physically. You actually just lose it once you take ownership. So before financing, consider the fact that you're going to be making payments, full payments on a vehicle that actually is worth 20% less than what you actually bought it for. So just consider the idea that you're making more payments on something that's worth less than what you're paying for. Okay? Number 4, look at a used car. So I know looking at used cars is not always the prime thing to do. A lot of people want to own brand new cars because there's some prestige with it. There's some ego that goes with it. There's also some more additional warranties that also go with it as well. Absolutely, I do agree there. But when you're buying a vehicle from the dealership, you do not have the upper hand. The dealership has the upper hand. When you're buying a used vehicle, let's say a pre-owned vehicle from the dealership, or even from someone personally, you can have the upper hand because cash typically talks more than financing a vehicle. So if you're looking at, the Auto Trader, Craigslist, Kijiji, or some other website that's similar, consider a vehicle maybe that's only 1 to 5 years old that you can still purchase from them. And potentially you still use your line of credit that hopefully is a lower interest rate to borrow the money to do so if you need to. There's a lot of reasons that you want to do this because, one, again, you can pay cash for that vehicle, right? You're not necessarily having to pay any interest potentially, especially if you have that cash available and you can pay for everything on hand. Cash simply is king. Money speaks when it's in your hand. It also gives you negotiating power. The seller wants your money and you really want their vehicle. So they want to make a quick sale. They don't really want to sit there and have people test driving their vehicles over a long period of time because there is some potential that other things can happen to the vehicle. So the quicker they can sell it, the better for you as well. And number 5, used vehicles hold value. So I want you to just consider this before you go out and buy a new car. So used cars that are usually older than 10 years old tend to hold their value at whatever price point you bought it at typically, right? So even if you drive the car for a few years, in most cases you could probably sell it for close to, if not the same price you bought the vehicle for. If you purchase that vehicle that's 10 to 12 years old, typically you can ask for an inspection as well. Just make sure you're not buying a lemon as well, right? And make sure, there's nothing that's typically that needs fixing. So a lot of people do this when they're looking at winter vehicles, just something that they're going to drive in the snow or in bad weather. I think you gain some leverage when you're able to have the inspection in hand, because if the inspection says, you need new tires, you need new brakes and whatnot, you can actually use that to lower the price of whatever you're going to be buying that vehicle at. I'm hoping you're able to use these 5 ways that I've asked you to consider before you finance your new vehicle, and really consider, is it worth financing that vehicle, or can you hold out and buy something a little different? Maybe pay out for the car outright, or even look at potentially leasing that vehicle if it makes more sense. My name is Maveen Kaura. Again, I am from DiscoverYourLifeToday.com. The reason I'm talking about this today on the video is because I've actually worked in the car industry, and I just really wanted to give some perspective on what you can do other than financing your vehicle. Now, keep in mind, when I was working in the car industry, that is exactly how I made my livelihood, was having people come in and finance vehicles with me and buy new vehicles and whatnot. So I'm not saying that it's a bad idea. I just really want you to consider all the different things that go into making a good decision when purchasing a vehicle. Leave a comment below and let me know what you thought about this video. Go ahead and subscribe to the Discover Your Life Today YouTube channel. Also go over to discoveryourlifetoday.com and subscribe to the blog. Like the video if you enjoyed it. And other than that, I hope you have a great day. And let me know if this helped you making your next vehicle purchase.